What's up, crypto gang? Welcome back to another episode. If you guys are new here, we do a giveaway at the beginning of every single episode, and today's winner is Neuropsycho. Nice username. You guys have some amazing usernames. If you guys want to win on the next video, like, comment with your wallet address, and don't forget to subscribe. Is crypto dead? No, it's not. Just plain and simple. You guys have been commenting and asking me. So many people DM me about it. Is it dead? No. And that's not just a random statement. It is backed up by historical data as well as experience myself. I've said many times before, I'm not a financial advisor, I'm not a professional trader, I'm not into technical analysis. I have virtually a very elementary education when it comes to technical analysis. But one thing I do have is a bachelor's degree in economics. And I'm not an economist by any means, but I do understand the basics of game theory as well as pretty much all the aspects of micro and macroeconomics. Think of something like Bitcoin, which you can look at as an asset. We have to look at the big picture. And when you look at the big picture, you have to take into account all the other assets that are available for investors to invest in. For example, let's take the stock market. Currently, at the end of 2018, we are seeing substantial drops in the Dow and the S&P 500. So what does this mean? This means that when an institution on Wall Street sees a drop in the market, what they're going to do is something called hedge. They're going to make sure that their whole portfolio doesn't get vaporized by a drop. Is they will spread the money in their fund out across various different markets, whether that's healthcare, technology, whatever it may be. First thing that big institutions do in recessions and crashes and corrections and things like that is they look for things that have already bottomed. And by bottomed, I mean that they look for stocks that have already lost a substantial amount of value so that they don't go down much further. The idea being that if a stock has already peaked and it's going down and then the entire market starts going down, if you invest in one that is already close to bottom or has already bottomed, you can hedge yourself to the point where it'll be going up as the others are going down. This is a really old tactic and it may or may not be outdated, but as far as a macro scale, you need to keep into account everything that's going on in the financial structure. Is the stock market going to go into a complete and utter downward spiral? I don't know. But what I do know is that it has been on an upward trajectory for a very long time, and we are overdue for one because the last one was in 2008 and we are past 8 years, which is the incremental time that is usually when recessions happen. Based on historical data, all the macro scale of every asset that you can possibly put your money into, what I believe to be happening is the stock market is going to correct in a big way. I've been following a lot of people that say the same thing. Over the next 2 years or so, it's going to turn into a bear market. And people are going to be looking for an asset that has already bottomed or is close to bottoming. Past 100 years, when the Industrial Revolution happened, people moved their money into gold and silver and various different commodities. And now the speculation is that that was when the Industrial Revolution was happening. People were making circuit boards, people were making computers, and now we are in a digital world. We are in a world that is entirely on the internet, and when people are going to hedge, they aren't going to hedge into gold, they are going to hedge into a digital gold. So by no means am I price predicting what Bitcoin is going to be, but I am merely laying out the landscape of the fact that Bitcoin is going to be a bona fide asset class over the next year or so when institutional money comes into it, because the stock market is going to take a slight tip over the next year. And they need to hedge, just plain and simple, whether it's 1% or 2% of their entire portfolio, they need to be smart about how they allocate their funds. So having seen this happen twice before in my experience in crypto, it is far, far, far from dead. It is just getting started. When you have institutionals sticking their money into a new digital asset that they want to hedge against the macro view of a crash coming, it makes perfect sense. To me, this is going to be the most bullish next 2 to 3 years that we have ever seen when it comes to a new asset class emerging into an old kind of archaic structure. So once again, not a financial advisor, not even close to a technical analyst, but I will say that from a macro scale, we are in good hands when it comes to money coming into the space. And I am very, very confident that we are going to see a massive run up over the next 3 years, 4 years that is to the scale that we have never seen before, because it is still a very infant of an industry. So that's it for this episode. If you guys liked it, slap a like. If you guys are new here, don't forget to subscribe, and I'll see you on the next episode of Hack Crypto.